All right, good morning. And the bell already rang. Today is October 23rd, 2023. It is Monday. It's the fourth trading week of October. And I think it's the week 43. And this week we will have a lot of earning report come out. So that's what we are seeing, right? This is the earning, right? This week is huge. A lot of companies gonna do the earning this week. So we are always at 43 of this year, right? 1 year we have 52 weeks, and we are at week 43 now. So 9 more weeks we close off the year 2023. And let's see what is the pre-market. Right here we have pre-market. So the pre-market today is drop 41, but drop 4 point, 41%, and the volume is 1.6. It's a very significant volume right there. Normally if we see the volume above 1 million shares, that's a good volume for pre-market right there. So let's see the right here. Yeah, this week we have the GDP data come out on Thursday, and let's see how the market, And tomorrow we have a PMI. I think it's similar for last week we had CPI, right? This week is PMI. And then let me see in the CEOP calendar. So here October. So we are in the 1, 2, 3, 4. We need in the 4 week, week 4 of October trading. All right. I just want to show something real quick. We identified before, but we put one new thing into our database or our pattern right there, which is I think look at the 1 minute time frame. Right here in the 1 hour time frame, we identify the market structure shift, right? But we only anticipate that it's gonna retracement up right here and then coming down. But in this case it makes twice. It's retracement twice, basically 2 leg up right there, or we can call double top right there. And you see how beautiful that it go, and check out the liquidity that can make that up run right there. So you see the market structure shift right here, the confirmation, and the rest is just drop all the sell side liquidity, and it go rapid all the way down here. It's just how beautiful market. So now we trend out, I see this, this pattern, right? It go up, and we see the market structure shift. Then we have to wait and pay, wait for this to go up here and short them. Don't be fear, because now we see how the algo work right now. So don't see this at a location to go long. The location, perfect location to go short right here, because it's a very low risk reward ratio right there. Very low risk trade and very high reward right there. You can come down and take all this liquidity right here. So now we have this experience, and the experience brings us the conviction, the confidence. We don't have this confidence before, because we just wonder, well, what happened? Oh, it's gonna go up again. No, it do not. Now we can see. You can see how the algo run. It trapped the sell side liquidity. All people go here, go long, gonna pay huge price because the next target gonna be this sell side liquidity. Beautiful, because right here the market tell us, it tells us, hey, we're gonna go grab sell side liquidity now. Look at market structure and the confirmation, and all this move, it just give us opportunity to go short. Big rally coming down right there. I mean, not big rally, but big sell. Beautiful. Okay, now we go back to see on 1 minute time frame what's going on. So basically it opened at 4/1961 today, right? So always try to memorize or remember the open price and close price. That's a good practice for us, and when we do that, it will really train our subconscious mind, pick up the important level. You know, we pick up this technique from I think from Linda Breakfast Rasky. I think she did say you know, about this. So it opened at 4/1961, and prior week, right? Prior week. Let's see what is prior week close. I think prior week close. Okay, so it opened below the prior week close, right? So prior week or prior day right there. Prior day close at 4/21/21. That's a beautiful number right there. 21/21. So it closed 4/21, and today it started at 1961. So 1961. Let's say it's about, you know, about $1.60 right there, and you see it make a new low right there. You see a huge down move right here. It opened up right here, but it's the gap up, but then it's coming down. Let's see if this. We see the market structure shift right here, right, in the 1 minute time frame. Market structure shift, but do not go long right away, because after the market shift, it gonna make. You know, in this case, right, it may make another, you know, 1 or 2 liquidity sweep on the sell side. So let's see what the level we see. Let's see. So also in the book, you know, Linda Rasky, she said that we need to anticipate, don't react. So that's a good technique for to put into practice right there. Anticipate the move around certain level, don't react, because react, that means you are in a you are not in a active, you know, state. You are in a passive state, right? Wow, it's coming down. Let's see. It may take another liquidity, sell side liquidity. You see all of this sell side liquidity, right? Sell side liquidity. It dropped right there. As you see, it's whipped right there. Let's see it's how deep it's gonna sweep. That's the sell side liquidity drop right there. So don't go in, do not go in long in here. Long right here, do not go in. So let's see. It may, yeah, it's in it the area, right? This is the first time it make, no, okay, first time it make a high low right here, but it not break the block structure. Yes, right here it break the structure right here. This move, you see this move when it break the structure, right? You see that break structure right here. This is a structure, right? When the market moving down, you don't want it to break the swing high. Okay, you don't want it to break this swing high, but it break this swing high and then it break that swing high. That's confirmation right there. Keep breaking swing. That's a market structure shift right there. But let's see if, and you want to mark the very first swing that break market structure, and it may go all the way to retest that area before it going up again. That is the technique or the pattern that we recognize right there, or we notice right there. Wow, you see the sell-off, the liquidity side seeking is intensified right now. See that? It come down. Yeah, and whoever go long or here in big trouble. Got kicked out, or if they stay in the trade, they it go against their position right now. So it make a non-new low. Let's look on the, let's see on the diversion, right? If we want to play any trade right here, let's say we want to go long right here, are we gonna go here, or we're gonna go short? We have to remain flexible because we have, when we remain flexible, that means we stay open, we accept you know, that we may be wrong. We don't need to be right. But if we marry too hard to our bias, that means we refuse to be wrong. Then not a good approach. We accept that we are wrong. The market is only right. I mean, in reality, sometimes it's very hard for us to accept that we are wrong. But if we apply that mentality, that mindset into the stock market, we are in big trouble. We pay the price for that. Right? We cannot control the outcome. We're not sure that we are right or wrong. We just go with probability, risk-reward ratio. We have to come with a low-risk idea. Whenever we take the trade, we already commit that we pay. That means we get paid for the risk we take. And whatever outcome the market brings to us, we accept it. Yeah, that's a beautiful mindset right there. Accept it. No resistance. If the market give us a winning trade, right? Successfully trade, not winning trade, yeah. And then beautiful. But if the markets tell us that, you know, the different way, then we also see it as a lesson. So on the diversion, we don't see anything yet. So let's see. But look at the 4-hour time frame. Do we see anything? Okay. Okay, right here, right? Okay, we saw a level on 1-hour time frame to play on the retracement, right? Let's see. Where is our 4-hour time frame? By the way, I use multi-monitor, so I only recall on one monitor. This one, right? We only use one monitor. So we look in other screen with different time frame. Or whatever we need to bring up something to discuss, we will put all in here. Okay, so we identify this level is a turtle soup for false breakout right there, right? If you look at the 4-hour time frame, right? If we look at a 4-hour time frame, right? So this is a new swing low right there, and it's the latest swing low right there. So it's a turtle soup setup for long. So it's gonna be 4 breakout, and you put all, you know, our buy stop in at this level right there, but we're a little bit late right there. Let me see. So you remember our trade objective. We're gonna identify the setup within 5 minutes, 1 to 5 minutes after it is formed. Then we reach our target right there, and we did. Right? We identified this like 1 minute, you know, after it formed right there. But let me see. The low of this is 30. Hold on, what's the low of this candle? 1880. Okay, here's 86, right? Okay, let's go back to the 1 minute time frame. You can see beautiful right there. If we put the buy stop in here, we get it. You see, wow, man, that's beautiful right there. But we should happy that we identify the setup, you know, just almost, you know, right at the moment it formed. 85, either 85 or 80. Let me see. 400 low, 80 for the 1880 right there. Oh, that's beautiful setup. But we should, you know, pack ourselves in the pack right there, because we are, you know, we are meet our trading objective, which is we identify the setup, the level within 1 to 5 minutes when it's forming right there. So we should say right here that soup, right, soup entry long on 4-hour time frame right there. Yes, right there. Beautiful. We put a buy stop at at what? So we're coming at 849, right? Let you know log in this trade, so we have some material to learn, to study. So turtle soup, long setup, and buy stop at 418.80, right? That's it. That's all we do. It's very simple. Yeah, we have to identify a target, right? What the target. Okay, let identify the entry right now. We can work on our target, because I don't want to keep it too long. We lose the live recording, right? So we try to balance between learning and having fun also, right? What today, right? Today. This is on M1. And today Monday it opened at 419.61, right? 419.61. Man, last week's Monday it opened at 430 something, and now it's open at 419.61. Wow, that's a drop right there. What do we see? Wow, you see, beautiful trade. It never, never reaches, not never, but it's not revisit the entry yet. So we have a loss option right here. We either get out here when it reach, this buy salability, or we can let it run. So we have a loss option when we enter in a good trade. We may let, we have a good option. Well, it may go up to the new week's opening gap, right? We have a new week opening gap here, so the target may be up there. It's very close right here, new week opening gap. I think it may go all the way here, or maybe all the way here. So we have a pretty decent target right here, right? Let's see what the close of this candle, right? This candle close at 23. Sunday. Oh 27 p.m. Okay, let's use the candle. We don't want to try to be perfect right here, but it is closed at 420.85. So 420.85. We try to do exactly, but 420.85. And what is the close of this candle? close of this candle is for 2043. Exactly. And this one, let's fix this one. I think this one is 85, not 75. Yep. And this one, we call new wick, opening gap, high. Okay. You see? Wow, look at that. Beautiful. Man. We're so happy that we start seeing things now. We achieve our trade objective right there. So new wick, opening up, low. Okay. Yeah, let's see. At least, it take the buy side right here, right? So if we are conservative, we are our trade now. We get our target. But let's see if it run up to the new wick opening gap. Low right there. By the way, the new wick opening gap, I think, is the concept or the term come from TIC. Just let you know that his concept. So we give credit where the credit due. So let's say we're going right here, and our target right here, like conservative rate, we go at sell side only, the last swing high. Oh, you see the gap right here? Okay, let's put it at the gap. Are you okay? Yeah, the gap right here. You see the gap right there. So it make a lot of sense that the algo, when it run up, it will fill out that gap right there. So then we put our stop loss. Well, this trade we have to handle very well, right? As soon as we're going, we may have to move our stop loss because our stop loss is widened right now. I mean, right there. Oh, but it depends. If we look at 4-hour time frame, we may see we may stay in the trade longer because this setup is from 4-hour time frame. Then we should identify that, with the 4-hour time frame. But anyway, let's see. Well, we reached 99 cents right there, right? It makes sense to put a stop loss right here because it's the last swing low. And $1, so it's almost 1 to 2, right? But as soon we get in, we may move the stop loss right here if we want to. Right, it's the last swing low right here, right? Swing low. To reduce our risk right there. But if we look on the 4-hour time frame, right, where we see the setup, then we may okay with the bigger stop loss. Because on 1 hour, on 1 minute, it looked big, but on one hour, it's not big at all. Yeah. Yeah, it's happened exactly like we identify when the market open, right? Okay, we see the market structure shift to the upside, but we don't engage because we see all the sell side drop right there. Wait until they take out all that sell side, which is it did. It take all the sell side right here, which it make a new low, and it broke down this level, which is a level on 4-hour time frame, and we identify a total sub entry long. So we put a buy stop right there. So it's going to be 10 hour false break, then we're good. If fall breaks, let's see how play out. So I want to remove this one. Okay, here's the 4-hour time frame when we identify the total sub long setup. You see that? Yep. So we can go in here, right? We put the buy stop in. I think our target may be at least it's gonna be this level at the new week opening gap high right there. Look on the 4-hour time frame. Yep. Or even it go up at this level, right? If we hold it the trade longer, we may have more gains, more profits to make. So we total sub long setup, total sub long setup, buy stop at 418. So let's see if gonna hit the level or gonna make a little bit retracement right to this area. I swing high. Let's see, it looked like a double top right there, but you see this swing right here, right? We see this swing. So we have a good trade right here. I mean, one trade a day should be, a good goal for right now. But it's not our trade objective right now. Our short-term trade objective is not about how many trades we take or how profit we make. Our objective right now is identify a setup between 5 minutes that it forms. As long as we do that task and we're good, we meet our trade objective right there. We don't have to do anything fancy at all. Here's our trade objective that we are put down the other day, right we need to do two things. We have to master ourselves, the mental game right there. And then we develop a trading system, right? You have to have a positive expectancy, and you have to fix our belief. Remember, we don't trade the market, we trade on what we believe about the market. So we have to get the right belief, and that is tied into the mastering ourselves right there. We remember we have no control over the market. The only element we have control is ourselves. We control ourselves. And how do we control ourselves? We have to understand ourselves first. You will not control yourself if you don't understand yourself. Okay, so right here you see our objective that we identify within less than 5 minutes after the form. Then we reach our objective right there. So this morning we did what we do. What true we set out right there. We identified the level, and we put in buy stop right here. We get it. So we identify the trade. Okay. Okay. So very interesting right here. Wow. So you see the target right here? We hit it. Man, it's beautiful trade to us right there. You see the long setup, right? We do the buy stop here, and look at that. We have $2.67 and 10:30, right? We are 6 minutes from 10:30, which is a critical time of the day when it make the high of the day and the low of the day. So I think we are in a good uptrend right here. Man, it's perfect. So beautiful. If we look at 5 minute time frame, I don't think it's gonna we don't think it's gonna go back here. You see, it's how beautiful light up right here, right? You have a high, the low right here, and then at the mid range right here of the EDR. Right now, it's not forming yet, but it's about to form. And it's a strong move right there. So this is swing low right here. It's just a false breakout for total subset up right there. We're going right there. We identified level at, on a 4 hour time frame right there. So so 2 more minutes, right? Yep. All right, it's 10:30 now, and yeah, oh man, beautiful from the DR model forming right now. So the DR model tells us that at 10:30, we will have the DR high right here, imply DR high right here, DR low right here, imply DR low right here, right? And then we have a mid-range, which is in this case is very close to the open at 9:30, which is for 1961. Beautiful right there, 1961 and 78. So it's about 17 cents difference. Okay, let's wait 4 minutes and then we can close up here, because I want to see what the next candle is going to show. 25.30, right? I want to see the candle. We want to see a candle at 35, how that candle, forming and finish it forming. right, so 2 more minutes. I want to see. Okay, it may retest this one, but anyway, I think we want to capture this risk to reward ratio right here, right? But very interested to see why it not go to the, it haven't go to, maybe you need to clear another sell side liquidity before it go to new week opening gap high, right? We really want to see it go hit the new week opening gap high, but right now it's just low. And we remember we go in right there and we risk. Okay, hold on. Well, let me take the screenshot and then we get out of here. Okay, so we want to say this trade is risk to reward ratio, right? It will be 98 cents, and we got $2.67 move. Wow, that's a huge move right there, my friend. Only just the first hour of trading, that's a huge move right there. On Monday, normally Monday not moving much, but you know, that's a huge move right there. If we measure from here, but if we measure from down here, it's gonna be $3, more than $3 move from the swing low to the swing high right there. So 1, 2, let's say 1 to 2, right? It should be good enough, right? 1 to 2, yeah. 18, almost 1 to 3, is that right? 3 times, no, not really. Okay, 1 to 2 should be good enough. All right, bye for now, and we have a wonderful trading this morning, first hour. Talk to you later. Bye for now.